our success will be determined on how well we take care of them. So we start off with 100% of the fare. We don't take a commission from the fare from their earnings. I also like to interview my investors as much as they interview us. Not just due diligence on like what their past deals are and that kind of stuff, but just themselves. That 100% fare is 100% fare. That's the first pillar of transparency for HOVR, right? That what you pay in terms of the fare, 100% of it goes to the driver. There's no question about it.
A question for you. How many rides have you been on Uber or Lyft where your driver has complained about how much they earn? Well, my next guest, Harrison Amit, has been changing the game with a rideshare company called HOVR. He's here so that I could pick his brain. Harrison, welcome to the show.
Thanks for having me, Rachel. Excited to be here.
So your tagline basically focuses on 100% fair is fair. That's your thing. How is that even possible when it comes to making that a reality for your drivers? And why aren't your competitors then already doing it?
Yeah, no, for sure. So 100% fair is 100% fair is our slogan, but also our business model. And so the way we were able to do this is instead of the drivers losing a massive percentage of their earnings to the platform, they pay a flat monthly membership, which allows them to keep 100% of the fares. So the breakdown is a bit like this. So the fares are the time, distance, and base rate. That's how we calculate it. And then there are also the fees. And the fees are kind of like the city fee, the insurance fee, the payment processing fee. And then we have a $1 flat platform fee, which allows us to keep the platform active, safe, and going, but results in the riders paying less and the drivers earning more. And so what more could you ask for?
And like I said earlier, why aren't others doing it already then? Like how is HOVR, kind of leading the pack when it comes to this sort of business model?
No, for sure. It's a great question. I mean, at this point, it would be really tough for these publicly traded companies to change their business model so aggressively because they really depend on the massive percentage that they take from drivers to keep their operations going. But the main reason they can't do it or they haven't done it is because of their public positioning.
Just kind of taking it back a few years, you founded HOVR because you also were in your cars like I have been in and found friction, right, between the drivers and existing apps. That was your inspiration. How were you equipped to found a business and grow it to what it is today?
Yeah, no, for sure. That's another great question. I mean, I spent a lot of time with different startup companies in kind of a consulting capacity when I moved to the city of Toronto in 2018. And that's when I was taking those rides that you're describing, getting to and from meetings and kind of different conventions and events and stuff like that. And that's when I was talking to the drivers and just learning a little bit about what is a day in the life of a driver in the city of Toronto. Then I started taking shared rides and started asking those questions to the other riders that were joining me and just trying to understand what the decision-making process was for these people. And ultimately, there was no brand loyalty to it. It was about how fast can you pick me up and who's going to provide the lowest cost. And the drivers just want to get paid equitably for the time that they put into providing the service. In terms of my expertise, I mean, it's mostly business development, marketing, brand creation, to market, that kind of stuff. And being able to take my experience from working with a number of different companies in the past to bringing HOVR to life and also having a fundamentally fantastic team behind us to help get this to market was the key to our success.
Let's talk about some of those success points. Sure. When you launched like driver signups in May, you had over 10,000 signups right away?
Yeah, so we had a pre-wait list of drivers that was about 5,000 prior to our soft launch in May. So our soft launch was really just to get our name out there, get the app into the ecosystem and start getting things rolling. And 48 hours after May 2nd, we had 8,000 drivers that were separate from the wait list who had actually signed up, downloaded the app, and submitted an application, which was super exciting for us. By the end of that month, we had 20,000 drivers. And to date, we've got about 48,000 drivers who have signed up in the Greater Toronto area to be on the HOVR platform. So we're really excited about that. It gives us the opportunity to now really focus on the ridership, dial that up, and just systematically add some of the drivers who have signed up as we can provide them with meaningful work.
Now, before we talk about how you're going to increase ridership, I want to understand what your 48,000 driver number is in comparison to Uber or Lyft? How many do those guys have?
Yeah, so what I'll say is that in the city of Toronto, there's approximately 60 to 70,000 licensed rideshare drivers.
Hmm.
And so, I mean, most of them are working on both of the platforms. One of the realities is that the majority of drivers who are working on that secondary platform are mostly deactivated drivers from the primary platform. And so, yeah, I mean, there's the reality is there's an overwhelming amount of driver dissatisfaction across the board, and there's plenty of room for a third option. And we think we'll be able to make a meaningful play to some market share in the overall market.
And ridership, how are you getting people on Hover?
Yeah, no, that's a great question. I mean, we've got a layered approach on how we do this. Some of the things you'll have to wait and see of what we've got in the hover in the hover pipeline, but on the ground floor, a lot of our drivers are our biggest advocates. And so they obviously work for the other platforms still, but they're happy to educate their riders that there's a better option in town, and that's Hover.
Hmm.
Right. So, with posters in the cars and, just them actually taking the time out of their ride to turn around and tell the rider about Hover, we've had a really meaningful uptick in ridership just from that alone. Like the other strategies are around, digital marketing and partnerships and a lot of event based partnerships where a lot of people are commuting to and from the event, and you might as well hover here and hover home.
um, I also talked, like I mentioned, to a couple of drivers before this chat with you.
Oh, wonderful.
And one of the things that I heard recently is the wait time can be upwards of 30 minutes for some of these drivers. It could be unique to him, but he just complained and said, I have to wait around for 30 minutes to even catch a ride.
You're not talking about hover, you're talking about just in general?
In general,
Yeah,
not Hover, not Hover.
good
This was
stuff.
an Uber or a Lyft ride.
Fair.
So I guess my question is, are you doing anything to mitigate that? Do you know of the issue?
Most drivers are online for 8, 10, 12 hours a day and between the platforms, right? And the time between the rides is actually a function of the fact that there's too many drivers for the demand. The supply outweighs the demand. And
Mm-hmm.
it's actually one of the initiatives that the city of Toronto is putting in place and that they tried last year and they're going to retry again in November of capping the number of licensed drivers in the city. Because if you think about the demand being pretty static and the average amount of rides is about 200,000 a day in the city of Toronto, that means there's only so much. And if you have an unlimited pool of drivers and that grows constantly, nobody can really make enough of a meaningful income, and it results in these wait times between the rides.
Yeah.
Right. So again, that's another function of Hover where we support the city in their initiative. If they aren't able to, for whatever reason, pass the cap, we will artificially cap our drivers.
Okay.
That meets the reality of the demand that we can produce
Mm-hmm.
with our ridership and our strategies to get more people to use the app.
So right now, with the amount of drivers you have, and I understand you're trying to grow the ridership,
Yeah.
I assume the ratio is off right now. Is that correct?
So again, there's 48,000 on the wait list. There's currently about
Got you.
1,750 that are actively on the platform, and that's in ratio to the number of riders who have downloaded the app, which is around
Mm-hmm.
40, 50,000.
Also want to move on to talk about another driver I met, and he actually knew Hover.
Very
He
good.
mentioned he knows the brand, but one thing he said is, "Listen, if you're talking to the founder, I want him to know this.
Sure.
I want him to know that his success depends on how well he can take care of his drivers."
Yes.
So I guess for me, it's kind of like deep in the trenches. What's the commitment from you and your team to make sure that that is what you are true to? Because that's one of the inspirations behind the business in the first place.
Absolutely. I mean, we've got a philosophy at Hover, a happy driver, happy rider. So, to be able to improve the experience for the rider, as this driver mentioned, our success will be determined on how well we take care of them. So we start off with 100% of the fare. We don't take a commission from the fare from their earnings. That's kind of their major pain point, right? After that, it looks at job security, right? Because they can be deactivated for somebody having a bad day and giving them a 1-star rating. We're not a big fan of that methodology, and we're leaning way more towards reporting incidents and having follow up and follow through on that rather than a reactive, algorithm that just arbitrarily deactivates somebody who may have just purchased a 50, 60, $70,000 vehicle to do this, right? So, job security is big on our minds at Hover when we work with our drivers. And the last kind of piece of the puzzle for us was okay, we figured out how to increase your earning opportunity. Now, how can we save the driver's money? And that's when it comes into what we're branding as the Hover member benefits. for the drivers. And so that could be anything from, discounts at the gas station, through partnerships, strategic partnerships, to phone plans that are at a discounted price as well, because one of the main things that they drain all day is data, right? And that can rack up a pretty big bill. Automotive partnerships, and the long tail on this is to actually foster the relationship with the insurance companies to give our drivers as members health benefits, vision, dental, and
So
health.
really, like, that whole membership idea is big here.
Yeah, the word member is really key for us, and it allows us to provide like holistic driver care in a meaningful way. And some of it will be gamifying to like X amount of kilometers you'll unlock this next member benefit, and some of it is just fundamental to being a human, and we want to be able to provide that to the drivers just for existing and on being on our platform and providing a great service to riders.
That's a creative and very smart thing, gamifying it.
Thank you.
It also encourages people to be working right with HOVR more. So that's really cool.
Yeah, I mean, it's also one of the reasons, right? Like staying true to why we're doing this and for the drivers, and we're not forgetting about the riders, but we know that a happy driver will result in a happy rider. We're actually launching a crowdfund, and that's actually as a result of an overwhelming amount of drivers who have signed up and reached out to us saying, "Hey, we want to invest." And as you know, I'm sure, and the viewers probably know as well, in Canada, you have to be an accredited investor to invest in a startup company or a pre-IPO company. And so we looked at different opportunities that we could provide an entry point for these drivers to invest in the company early alongside the other investors. So Front Funder, through a partnership with Front Funder, we're rolling out a crowdfund where the drivers will be able to invest. And once
just drivers?
No, so the first kind of week of the campaign is directed towards our driver community, giving them the first, right of refusal, if you will, but not really, just kind of the first opportunity to get in, because there is a limited amount of equity that we're putting into the crowdfund, and this is an equity crowdfund. It's not like the pre-purchasing rides or buying memberships or anything like that. There's no products involved. It's an equity-based crowdfund, and so the drivers will get the first shot. Then there's an investor community of about 40,000 investors that we've drummed up, who are unaccredited angel investors, but that like to get in on these types of opportunities. And then we'll make it available to the general public.
I don't know what the app is called, but years ago there was a rideshare company that cropped up in Toronto, and they disappeared. So clearly something didn't work. How is HOVR different compared to the other guys that have tried to come up in competition to Uber and Lyft?
Yeah, I mean, I think a lot of people look at this market as a capitalization opportunity versus an impact opportunity. And so HOVR's taking the impact route where, going public is not on our agenda anytime soon, right? And, those other companies that you might be mentioning did go public in a very aggressive way, which resulted in a lot of animosity towards the driver community, who kind of got left behind as the people at the top capitalized from that public event and then kind of moved on to their next venture. Yeah.
I like that, though, the differentiator between capitalization opportunity versus impact opportunity. Good for you.
Cheers.
So you're also turning 29 this month.
I am turning 29.
Happy early birthday.
Thank you so much.
And it's pretty cool because you're about a year younger than me, and you are, savvy, smart. Like what kind of like childhood did you have? What did you learn that you think has influenced you to be who you are today?
Yeah, it's a really interesting question. I mean, my parents are, I like to say, the best parents out there. They're fantastic individuals. They're both very community driven. My dad was the executive director of a non-for-profit that helped people with intellectual disabilities find homes after they turned 18 so they could move out of their parents' place and kind of be supported with support workers and housing and potentially jobs depending on where they landed. And then my mom is actually an addictions counselor. And so she spends a lot of time helping people through, like, stay off of whatever substance or activity they were abusing, which led to their, their circumstance. But yeah, I mean, it's always been about how can we help? How can we help others? And I come from a small town of about 4,000 people, Stellarton, Nova Scotia, and I moved to Toronto in 2018. So when I came here, I wasn't sure exactly what I was going to do, to be totally honest with you. But I was looking for a way that I could make a meaningful impact in people's lives, and finding something that was big enough to pour all of my attention into, and it turned out to be the rideshare industry.
And I think ideas are cheap, right?
Yeah.
Ideas can, I've had 20 ideas today, but what you make of it is important. When you first started Hover,
Yeah.
you were just you, and then you slowly grew. But I'm sure you also had to take a ton of risk when it comes to how much money you're going to invest, who you're going to have invest in you. Kind of walk us through that and the mental journey, right? You had to go through to grow it to what it is now.
Sure. So in 2019, it was time to incorporate because we had the branding and the idea and, the hat on my head type of deal, ready to go talk to investors. And then in March of that year, as we all know, everything shut down. So, I saw it as a blessing in disguise and the opportunity to really dial in on the industry as a whole and take that idea from an aspirational idea to a fundamentally sound idea with data points that aligned with a profitable opportunity versus kind of the industry standard of spraying capital out there and then needing to recoup it later, which is what we're really seeing now with these increased prices and larger commissions being taken. And so, yeah, I mean, from 2019, 2020, 2021, 2021, we got the app out. That took a lot of effort and a lot of time, but it was an amazing journey to get it done. 2022, we really started bringing the team together, and all along the way, I'm speaking with investors as to what they think about the idea versus invest in me right now, because
And what was that? What did they say to that question?
yeah, I mean, it allowed me to get a really good feedback loop going with groups of people who had looked at, hundreds of these opportunities on a global stage and some that worked, some that didn't, and why they worked and why they didn't. And so I was getting a lot of information that, would be traditionally from an advisor, if you will, which came later in the journey as bringing on some advisors, building out the executive team, getting the foundational, tech team put in place and the marketing team and et cetera, et cetera. But going back to once we got the app out and talking to these investors, potential investors, I've been able to stay in touch with them. And again, I didn't want to take money too early because I find then you're really at the will of the investors as to what direction you're going to go with things. And I've come across a ton of investors who have said, Harrison, you need to charge more for the membership. You need to take more per ride. You need to figure out a percentage, like 10% is better than the 30% that they're losing right now. But it just didn't resonate with the core purpose of Hover and why we're doing this. And if you can build a profitable model, that is impactful, then what's the purpose of really taking that much more, right?
Mm.
And I understand that when you have investors, you have a fiduciary duty to increase their shareholder value and all that kind of stuff, but that's the reason why I didn't take money too early. I wanted to get a great foundation under us, a great app, a great driver base, and some IP, and some patents out there so that we could really carve out the direction. Like I've trademarked 100% fair is 100% fair,
Mm.
just so that we won't be able to take a percentage in the future because that would be deemed
Is
as
that a,
wrong.
a tagline that you came up with yourself?
Yes, it is. Yeah.
Oh, okay. I like it.
Cheers.
Um, just want to talk about going back to the investors, right?
Yep.
Sounds like you want like-minded investors, people who believe in your vision. What's kind of like, is it a gut check or do you have a process to weed out the bad actors in the investing community?
Yeah, I mean, I think it comes with experience. I've definitely crossed a couple of wrong bridges along the way with the wrong investors, and it takes time and energy and money to get them out, to push them out. But it's taught me the signs of what you don't want.
What are those signs? Tell us.
Oh man. I mean, when people start talking about taking you public because you're profitable too early, that's generally not something you want to entertain unless you're in it for that,
And
right?
I'm sure you have a lot of people approaching you about going public right now.
Daily. I mean, it happened just earlier. Right?
I did
So,
hear that.
yeah. So, I mean, it's a very common thing when, people in capital markets see the opportunity of a profitable entity so early on, um they want to make their fees and do their thing. That's what it comes down to. So avoiding that whole conversation, and then there's also the investors that start to go down the road of how can we maximize this without even having done anything yet. Yeah, I usually just ask them how their pets are and how their family is, and just try to change the topic. And I usually steer away from those conversations as well. I also like to interview my investors as much as they interview us, not just due diligence on like what their past deals are and that kind of stuff, but just themselves. Like, are you a family person? Like, what do you do in your spare time? All those things that you may not think about asking an investor in the beginning, and that you kind of get to know over time. I like to just lead with that kind of stuff and get to know the person for who they really are. And it just helps you kind of judge their character and why they would want to invest in this type of a company
Yeah.
at this time. And I should add, we've been able to find some fantastic investors and great individuals who have invested in HOVR, and their backgrounds are just fantastic. Like, I couldn't say enough good things about them.
Uh, we talked about happy driver, happy rider.
Yeah.
But in real world interactions, where let's say your rider is super drunk and they mess up your car, or the driver is having a bad day, and this isn't always realistic. Um, I guess my question is, it's not really a question, but as somebody who founded this company and you've got a long way to go until I'm sure you'll be happy with where it is, because it's an evolving business. How are you going to make sure that this philosophy is true?
Happy driver, happy rider starts at the company, right? So, how do we treat our driver? I mean, how the rider treats the driver is a little bit out of our hands in the beginning. I mean, over time, we have some strategies on how to uh, better match riders with drivers, so they actually have meaningful connections based off of some of the things that we've got in the works. But long story short, I mean, it's an unpredictable world. It's unpredictable what the riders are going to be doing in their own time in their own lives before they get into the car. We don't have a whole lot of control over that, but how we mitigate, and how we respond to some of these incidents that you've described is really about how we keep the driver happy. I mean,
Hmm.
and they're very aware of this. One of the things that I'll highlight is we have a minimum 3-month experience barrier for our members. So you have to have experience with the other companies before you come to us. If you don't have that experience, we don't necessarily want you on our platform.
As the
It's
driver.
as a driver, correct? And so that 3 months, they've seen a lot if they've been driving full time, and they know what to expect. And they're probably going to have the bandwidth to stick it out when those incidents occur. And again, it's all about how the company responds when these things happen. And we try to be as proactive as possible, but we're also very, positively reactive when things do occur.
Are your drivers who've been driving for, let's say, 5 months versus a driver who's been driving for a month going to be treated the same when rides are being dispensed to them?
Yeah, it's a great question. So we have a non-bias algorithmic way of distributing our rides, and it's all based on proximity. And so whoever's closest to the ride call is who gets it. And there's a radius, and whoever's in that radius will all get it at the same time. And whoever accepts it first is the one to get it. We are aware that there are different ways of doing this, but we didn't necessarily like a lot of those kind of seniority based, or even the opposite of, if you're new, we want to get you sticky and we were going to give you rides until you're kind of hooked, if you will. We really wanted to make it very an equal level playing field for all the drivers who are active, right? And
Hmm.
so if you're in the area, you're going to provide the shortest pickup time. That's where it goes to first, and then there's another radius and another radius until somebody that is available picks it up and takes people where they need to.
So far, we've been talking about drivers being screwed over generally.
Yeah,
So they're already salty, right?
absolutely.
How are you going to be earning their trust? And because for a lot of these guys, it's a new brand, that's going to be even more difficult.
Yeah, no, for sure. I mean, one of the ways that we've had a tremendous amount of success getting the drivers onto our platform in the first place was spending time where they spend time online, in terms of the Facebook groups, the WhatsApp groups, the Reddit forums, and anywhere where drivers are talking about their problems. And we've extended that ear, and we're listening, and we're trying to understand, like, how can we do better, right? Because we don't want them to feel like we're just another platform that's trying to take advantage of them and steer them in the wrong direction. We want to make sure that they understand that they're in the driver's seat, they're in control of this, and to a certain degree, they have some level of input on how we move forward as a company, right? That's like kind of whole member-based association style, approach to the industry, and valuing the workers' input in a way that results in those feature sets actually coming to life when they ask for it, right? And when they've identified something that could be a meaningful, advantage for them versus a clear disadvantage that they've faced in the past with the other platforms.
So basically, like, you're just constantly putting effort into listening to the people that are a part of your platform.
Yeah, I mean, as a CEO, I still spend about an hour every single day when the phone goes off, and I know I've told our support team, like, if there's something that's like a big deal, like, just file it my way, and when I've
Mm.
got an hour, I want to tap into it myself and see how we can, satisfy whatever's going on, and just listen. It's drivers, they don't feel supported. They haven't felt listened to for years. They felt like they've just been taken advantage of, and so it's time for the tides to turn. And that's what Hover's all about.
Mhm.
Hover's here to help.
Yeah, I'm looking forward to the day where my drivers aren't salty about how much they earn, because I want them to earn more. I want them to be doing better.
It's interesting you say that, because like the majority of riders, once they know how much the driver loses, and they've definitely heard the complaints before, so a lot of them do know nowadays. But in the beginning, like, they didn't know. I would
Yeah,
get
there
into
wasn't
shared rides, and
transparency.
yeah. So that's one of the things that we really lead with: transparency. Like, that 100% fair is 100% fair. That's the first pillar of transparency for Hover, right? That what you pay in terms of the fare, 100% of it goes to the driver. There's no
Mhm.
question about it. They can also understand when they see the fare come in, because they get a reflection of their earnings when they accept the ride, right? And where they're going and all
So
those
the numbers are
details.
side by side,
How much they
how
earn.
much they earn versus how much the ride is costing the rider.
So they'll see that at the end. So
Okay.
they'll see what they earn. And usually, so right now, the way that it works is they'll see what they earn, and then they'll lose 30% of that or more, right? Because it's an algorithmic decision making process that the other platforms use to determine whether it's 30%, 35%, 38%, or it could be more,
Oh,
right?
didn't know that.
Yeah. So when you kind of dive into the weeds of the driver agreement, they have the right to kind of increase it, and is an average of 30% that comes out at the end of the day. But I mean, I don't know if anybody's really tracking that, but at the end, like, what we're doing at Hover is just taking all of that nonsense out of there.
Hmm.
100% fair is 100% fair, and taking care of the people doing the job, right?
Now, if I'm an investor, I'm wearing my investor hat.
Yeah.
I'm thinking, okay, you're profitable now, but what if it's not sustainable? You know, Going back to the earlier point you made about one of your investors in the past, you need to charge more for the membership fee. How do you ensure that profitability just keeps better and better, not worse?
Yeah, so our current driver membership is $20 a month. And that might sound really low, but we wanted to build a profitable platform off of the bare minimum, because then it gave us a lot of room to earn increasing the monthly membership, right? So, for example, right now we're brand new. We're not giving drivers the amount of work that the other platforms are giving them. Those that When we start to become to the level, or get to the level where that's not the case, like drivers doing 10 plus rides per day, um, that's a significant amount of revenue where they can support maybe $30 a month instead. And it's something that we can put to a vote with the drivers. Like, I've had drivers before we launched tell me, Harrison, if this will help get it going faster, we'll pay $100 a month. And that's not an issue. There are other models out there, I won't name names, but that are using membership models that are like starting at 100 and go up to $400 a month. So there's a lot of room to grow. If you think about 30% of all your earnings, you're losing thousands of dollars a month to the platform if you're earning $4,000 or $5,000 a month, right?
So $100 is a drop in the bucket.
It's nothing, right? So we have
Hmm.
tons of room to grow, and that'll allow us to continue to improve and iterate and bring some of those feature sets to life that really do continue to support drivers.
Now, I love talking to the founder community because I learn a lot and I'm inspired by people like you. What have you learned recently from other founders with what they're up to, that maybe stuck with you, that was memorable?
Yeah, I mean, I like to spend a lot of time with founders myself. It's kind of a smaller community here, but in Toronto. But it in terms of what has stuck out to me is the raising in Canadian dollars and in the Canadian market landscape. All the Canadian founders are having a tough time with it. It's just, you know, the way that things go versus, heading down to the US and making that leap down there, and growing at a different rate and raising it in a different capacity. That's generally the conversation that's had. But we really do want to stay as Canadian as we can for as long as we can, while we do what we do. And that's why we take our time with finding the right investors. But if there's anything else that I would highlight that comes from founders is the growing pains of a team, right? And so for us, we started with a team of 12 and we grew to a team of just around 40 people, and in a very short amount of time. So you've got processes, training, onboarding, getting everybody on the same page, building the company culture. And that's a big conversation that I find a lot of founders have when we get together, and how to keep that culture, build that culture, and just kind of expand on it as the business and the startup expands.
Rideshare, this industry, it's also a tech industry, as a tech play, right?
Yeah.
So my question is, how do you see it evolving over the next few, months, years, and how are you going to be positioning Hover through all of that change that you're personally expecting?
Yeah, no, it's a great question. I mean, the others really laid the groundwork for this industry to be what it is today. And Hover's entering in the position of like a more equitable opportunity for the drivers, and then which is really kind of like a social push. But from a technology perspective, we've got a couple of things in the pipeline that we're really excited about. Changing the experience of you know how you actually interact with the app, how you're getting into the ride, and how we match people together is all things that are really interesting for us.
Hmm.
Fostering a sense of community in cities around the world, because I find even in the last couple of years after coming out of the pandemic, uh, we lost that sense of community in a really big way. And so finding ways with technology to really connect people again is something that we also spend a lot of time on at Hover.
Mm. And you did mention your crowdfunding campaign, which is
Yes,
happening throughout September.
September, October, yeah.
September, October, which
Yep,
is great because I think viewers could potentially look it up and see if they want to invest themselves.
absolutely.
But kind of walk us through how a crowdfunding campaign works and how much people need to be putting in, what they can expect to get out of, etc.
At a high level, to be able to do this type of a thing, you need to partner with an entity that gives you kind of this special exemption for crowdfunding, because it's the closest thing to going public without going public, right? We're basically providing an opportunity for people to invest at the ground floor, and we've done a lot of work at Hover to be able to kind of de-risk this investment as much as possible before taking that step. But you can expect a a low share price with a ton of room for upside as we expand this. It's a very scalable business in the sense that you know as a tech-based product, we really just expand our geography based off of getting a business license and expanding our insurance policy. Those are kind of the two keys.
Mm.
And so Amazon Web Services isn't going to let us down, I don't think, as we scale, because that is our kind of the backbone of what supports the infrastructure side of things. And yeah, I mean, as long as Amazon's around, we're going to be good to go at a global on the global stage.
Now, Toronto is obviously key right now, but are there any target cities for you in mind next?
Yeah, no, absolutely. I mean, we've done an assessment of the Canadian market and how we want to expand. And one of the things that I've found with the other platforms that I've tried to enter the space is that they expand way too quickly and they expand way too aggressively. So we're being a bit more thoughtful about this. And what we've done is we've opened up a wait list for drivers from different parts of North America and even around the world to submit an application. And when we see, a target city have a number of drivers reach that threshold that we look for to be able to roll out, that's when we make that kind of move towards the market and
Mm.
start applying for the business license, talking to our insurance company, and then expanding our borders. Miami is on our hit list for sure. We're really excited about the opportunities down there. It's a very vibrant market, growing market, and a lot of people are moving to the state of Florida in the US. I don't see that growth slowing down anytime soon, and the need for a more equitable option is very clear from the driver forums that we've looked at. And so, yeah, I mean, we've got a couple thousand drivers down there who have signed up already. So we're really excited about the
Mm.
move.
Especially for non-Canadian viewers,
Yeah.
I'm curious about your, I guess, thoughts, your vision for the city of Toronto.
Yeah. So, it's for me, it's exciting because as a Canadian, all of our innovations will start in Toronto, right? Anything that we expand to other parts of the world as the app grows will be piloted here, tested here, and proven in Toronto. So Toronto gets the benefit of basically being the founding city and being the city that will get to test out all of the incredible things that we have to come at Hover in terms of that experience that I was talking about and some of the other fundamental core business units that we'll be adding to the on-demand driver service.
Hmm.
Yeah,
Well, Harrison, thank you so much
it's
for
been a
being
pleasure.
here.
Thank you.
Where can people find you? I know you're on LinkedIn, for example,
Yep.
but whether you're an investor or just someone who wants to reach out, what's the best way?
Yeah, for sure. So LinkedIn is great. You can email investor@ridehover.com if you're interested in finding out more. There's kind of an automated package that'll get sent out to you through our investor relations team. And yeah, if there's people who are interested in investing in Hover, make sure you're doing it for the right reasons.
All right, guys, that was Harrison, founder, CEO of HOVR. Make sure you subscribe to CEO.CA on YouTube and keep following the show, as I'm going to have more and more awesome guests for you guys. Thanks so much. Bye for now.